Hello, welcome to Capital Market Live on Channel Television. I'm Ladi Williams. Well, this is the first one for the month of July, first for the second half of 2023 and the third quarter of 2023. So many firsts today. And first thing first, let's check in on the markets now and see how your stocks performed this week. Start with the European markets. We see most of the stocks there climbed on Friday and notched strong for first half gains. A resurgence that came despite the interest rate hikes and bank failures. The FTSE 100 rose by 0.80%. France's CAC index 40 grew by 1%, while the German DAX climbed 1.26%. Comes as Eurozone inflation data fell more than expected for the month of June. The figure came in at 5.5% this month, indicating that the fiscal tightening of the European Central Bank could be starting to have the desired effect. Core inflation, which includes food and energy, rose, however, coming in at 5.4%. Let's move over to Asia now. See, Asia-Pacific markets were mixed on the final trading day of the first half of the year. Mainland China markets closed higher. The Shanghai Composite gained 0.62%, closed at 3,202 points. The Shenzhen Component rose 1% to close. Factory activity data in China contracted for a third straight month, according to data from the National Bureau of Statistics. Hong Kong's Hang Seng Index was slightly lower in its final hour of trade. Also in Japan, the Nikkei 225 fell 0.14% to 33,189 points. U.S. stocks rose on Friday, and tech names continue their staggering run to cap off a strong start to the year, the best half for the Nasdaq Composite since 1983. The Dow Jones Industrial Average gained 0.84%. The S&P 500 climbed 1.23% to end at 4,450 points, while the Nasdaq Composite advanced 1.45% to settle at 13,787 points. Mega cap technology stocks responsible for a sizable chunk of 2023's market gains. They rose Friday. Notably, Apple gained 2.3% to close above $3 trillion market cap. Elsewhere, Nike shares bucked the board market uptrend. The apparel giant fell 2.7% after reporting a weaker than expected quarterly profit. All right, for analysis now, Olumide Additional joins me via Zoom. Great to have you, Olumide.
Thanks for having me. Good evening, Ladi.
So how do you see U.S. stock market performance in the first half of 2023? It's looking pretty good. Right there, despite the rate hikes and all the banking stress we saw in the first quarter of 2023.
Just like you rightly said, it was a terrific half year, going fully well that a lot of investment analysts had bearish bias towards the world's most liquid stock market. And that was pretty much because they saw the hawkish US Fed keeping up rate momentum. And yes, the US Fed did. In fact, at one point, the US Fed increased rates by 10 times in a row before pausing weeks ago. But that didn't deter investors. We saw the S&P 500 posting its best half year since 2019. We saw the Nasdaq printing out 31.7% in the first half. That was the best performance we've seen since 1983. And also the most liquid, blue chip stocks at 30s, though also had the most modest gain of 3.8%. So it pretty much tells you that it's been a blue wave in the stock market. And though there are concerns that the market might look like it's been overbought, I won't want to bet against the bullish run. You look deeply into stocks making the big weight. You can't exclude Apple. Apple in 1980 was worth $1 billion. Right now, it's sitting at $3 trillion. And we've seen that investors that really tapped into those gains are also seeing their stock value. Berkshire Hathaway, one of the world's most admirable conglomerates run by Warren Buffett, had a $44 billion investment in Apple. And as we speak, it has a paper profit of about $176 billion. So it really tells you that it's been a very pleasant moment for world top investors. And we've seen not just tech stocks rallying high, we're also seeing financial stocks, particularly MasterCard, JP Morgan, Berkshire Hathaway at their 52-week high, telling you that it's not just about AI. We're also seeing the fact that these stocks are also boosting dividend, particularly JP and Morgan Stanley announcing the fact that they're going to increase dividend after passing the Fed stress test. So it's been a very interesting momentum in the US stock market.
Quite interesting. What are you seeing for the second half of 2023 in the US market?
It's quite very tricky because, a lot of pundits didn't see this rally coming to play with the hawkish Fed. But I think at some point we slow down, because if you look at the levels at which they're trading right now, it looks like they're pretty much an hour. But you can't ignore the narrative that AI has really, artificial intelligence and the likes of advanced quantum computing has also brought in much administration in tech stocks. So stocks like Nvidia, that is already at a $1 trillion valuation, might start seeing some moderation. Elon Musk, Tesla stock had more than doubled this year, and that was because of partnership with other car makers. So pretty much, as we're seeing the economy doing wonders in the United States, we expect slowdown in other parts, particularly China and Middle Europe. So it's really going to be very tricky to say the momentum will keep going on.
Yeah, quite a hard one to predict that. Thank you so much, Olumide Adesina, financial market analyst, giving us details from the U.S. markets. Thank you so much.
Thank you for having me.
All right, now let's bring it home now. The domestic equities market continued its uptrend as sustained bargain hunting activities in blue chip stocks pushed the all-share index above the 60,000 psychological mark to close at 60,933 points. That's the highest level since May 2008. This despite the shortened trading week due to public holidays on Tuesday and Wednesday to mark the Eid celebrations. Positive performance was driven largely by interest in Airtel Africa, MTN Nigeria, and GTCO. However, following the shorter trading week, activity levels were weaker than the previous week, with volume value traded declining by 31.6% week on week and 1.5% each. Performance across sectors was broadly positive as all key indexes closed in the green. Ikeja Hotel topped the gainers chart for the week as the stock price climbed by 33%, while Secure Electronic Technology PLC drew the shortest straw. Meanwhile, the banking sector dominated top trades for the week, with Axis Holdings, UBA, and GTCO in the top 3 positions. All right, for a review of the first half of 2023 and an outlook for the second half of 2023, joining me now is Mr. Andy Saku, equity trader, Capital Care Trust and Partners. Great to have you on the show.
Great pleasure, Ladi. Good evening.
Yeah, so from the U.S. market there, great first half we saw. And right here in Nigeria, too, we see the all-share index appreciated by about 18.9%. We closed at 60,108 index points in the first half of 2023. Was this expected, with sky-high inflation, central bank tightening cycle since 2022? How are you seeing it?
It's quite interesting what the market has done, the entire half of this year. If you did ask me this question in January, I certainly wouldn't have anticipated this level of average in the index level, even though I was optimistic that something positive was going to come into play. So by and large, what we've seen, in the space of this past 6 months is quite phenomenal. Particularly when you juxtapose that against specifics in terms of individual companies and the level of change in price, given fundamentally where they were on 1st January and up to yesterday when the market closed, at the end of June. So we have seen quite a level of activity, broad index, capitalization, individual stock prices, churning out in more than, dramatic patterns. And so by and large, certainly, having 18.9% average in the index year to date is quite commendable.
Quite commendable, but with inflation about 22.41%, we're still seeing real returns in negative.
Absolutely, Ladi. The question to put in focus is the fact that if you had an asset in January this year that you really didn't put into investment, for example, if you had cash in January and you stayed with the cash, you still would have been beaten by inflation in any case. And therefore, it made more sense that you put your resources into avenues that were earnings generating. So by and large, we have not seen across board or in specific terms for some, the levels of increase that would have generally brought about a balancing out of the inflation effect. But it is still better that you have a near negative than a large negative, because if you didn't have any return in any case, you won't be talking of comparatives.
Right, definitely better than being just in cash, definitely. Well,
Yeah,
which stocks, which stocks were the winners and losers for you in the first half of 2023?
So in answering this question, I like to be very careful because the numbers that we're seeing for some stocks basically are certainly outside mind-boggling, because the kind of acreage we saw in some stocks, FTN Cocoa, for example, leading the pack in excess of 700% between January and date. If you were an investor of ₦1 in January this year, that stock would have gained over 700% as at date. That means you never exited the stock, or depending on at what point you came in between in the course of the year, you still would have had some phenomenal increase in the value of FTN Cocoa. The same we saw in MRS as well as the Ikeja Hotel. Transcorp Hotel also posted phenomenal increases. And by the way, most of the stocks listed on the bourse has some phenomenal increases in their valuations. If you take the numbers closely, you'll find quite a number of them that had a return between January and date for those who had it and didn't exit along the line in excess of 100%. Now, the interesting thing about the figures that you're likely to see is the fact that those stocks that traditionally investors are wooed towards didn't give us much return. So the likes of the banking stocks, yes, you have seen some changes in their valuations, but most of them did not return more than 100%, unlike the stocks that ordinarily people will want to take a look and turn the other side. So
Mr. Shaku,
clearly, yes.
Yeah, I'm quite interested in FTN Cocoa Processors. There's a big move there since January, 700%.
Yes.
And I'm wondering what drove that, because I looked at cocoa prices in the global market there. I see that cocoa prices are rising. But what exactly drove that stock so high to give such incredible gains?
Two basic sentiments. One sentiment is the fact that there has been continuous clamor for investment in the agro sector. That was a big pull for the stock. Secondly, it had also an incursion of fresh investors who saw, or are rather seeing beyond the now and the value inherent in such a company. And so they began to take position. So we saw quite some increase also in the likes of Okomo and Presto, but certainly not anything comparable to FTN Cocoa. And so those two factors clearly played out for the stock. The fact that there's government incentive in terms of talk as well as investments already in that direction. The second is the fact that the investors are seeing beyond the now. There's a lot of potential in that stock, and that's why we saw that kind of acreage.
Let's look at the losers of the first half of 2023. Which one stood out for you?
Yeah, we didn't quite see many losers, I must confess, and by and large, they also did not quite come out, from the big names you would expect. We didn't quite see significant improvement in the likes of Morrison Industries. They didn't quite do well. But if you look at the aggregate value of decline, they were just sub 50. There was hardly any stock in the course of the first half that lost up to 50%. And that says a lot. It means indeed that investors are beginning to look beyond the now. There's increased confidence in the market, and investors are actually pricey. And so we have seen, the very few stocks that didn't quite post well are usually the stocks you would consider the penny stocks.
All right, quite incredible. But we'll continue this conversation, right after the break. Still hang on there, Mrs. Saku. When we come back, we're going to look at what to expect for the second half of 2023. Stay tuned. You're still watching Capital Market live on Channels Television. Welcome back to watching Capital Market live from Channels HQ, and we're reviewing the first half of 2023, how the stocks performed in the capital market, and what to expect for the second half of 2023. I still have with me Mr. Andy Saku, equity trader, Capital Care Trust and Partners. Thank you for staying on, Mr. Saku.
A pleasure here, Ladi.
All right, so looking at those winners of the first half of 2023, looking at stocks like FTN Cocoa Processors, they've done over 700%, and some other stocks that are above 100%. How should investors play those kind of stocks entering into the second half of 2023?
Okay, so let me start by saying the fact that every price you see attached to any stock at any given point is a direct expectation or assessment of the true value of such a stock. Usually when stocks do rise by this momentum, they just give you an indication of possible direction where such a company is headed. Now, if the prices are deemed to be, in any case, overvalued, the market has a way of, recalibrating itself and therefore bringing about some level of adjustment. So by and large, it is not just the nominal value that you see on display as a price, but a testament to what the thinking of the market is at any given point. So that a stock is trading in excess of, say, 1,000 does not necessarily mean it is expensive. It is just an expression of value at that given point. So what do I expect? I will expect that for companies that have already enjoyed some level of leverage in terms of their pricing, people should watch out, investors should watch out. Discerning investors will be looking out for what are the prospects for growth into the future. For example, if you look at some of the banking names that didn't make that list, the likes of Access, GT, Zenith, UBA, they certainly provide for you, when you look at the numbers, the expectation that they certainly have no reason to their peak, because in terms of real value, some intrinsic valuation is yet to be impounded. And to that extent, it means if you are already a holder in such a stock, unless of course you have to sell, don't get out too soon. But for those that have suffered losses, it is also reasonable for any discerning investor to first of all understand why the prices are that low. And if they are not fundamentally low because of anything untowardly, then investors should also look at them, because sometimes the lower the prices get, the better the opportunity for an uptick.
Looking at the losers of the first half of 2023, which ones stand out for you that you think maybe investors should start positioning in for the second half of 2023?
Ladi, the cardinal point, like I said, is not so much the fact that the stock declined or has risen. Valuations have a basis that provide information for investment decisions. And therefore, you will not just take a stock to invest in simply because the price went down. Therefore, first thing first, do your analysis. Whether this price is currently lower than it was in January 1 or not, or it's even higher, what you need to do is, what is the fundamental basis driving this stock? And usually, your investor, or rather your investment guide, is the best to prescribe such. It is also key for me to also say that even the stocks that have gained, you will not just be joining the bandwagon simply because there appears to be an uptick. And therefore, my recommendation would be for discerning investors who are still looking at this market to please speak with their brokers.
Yeah, speak with your broker so you don't go buying the top of a rally, at this point. But let's look at, foreign investor participation now. Have they started trickling in with the unification of the FX market? I know it's majorly still local investors in the market right now.
Yeah, well, one of the things that happened with the meltdown is the fact that, foreign portfolio investors gradually took their exit. However, it is also, interesting to note that while they did, the local investors upped the game, and that has remained largely the phenomenon. However, with the changes that have come on board thus far, and hopefully if they are retained at the level that they are, one of the key things, Larry, that we need to underscore is the fact that no market thrives on uncertainty. And therefore, when you cannot predict the direction of an economy or the policies thereof, it makes investment decisions very, very difficult. And therefore, the message that the FPIs will be interested in is the decisions that have been taken with respect to the foreign exchange unification of rates or prices, whether or not they will linger with us into the foreseeable future. Once investment decisions are gleaned on the altar of predictability, you can be sure capital will find its relevance and expression in such climes. Therefore, I do think that the atmosphere for Nigeria at this moment should be enticing enough for discerning FPIs to make their incursion, particularly when you look at also the turmoils that are going on across the globe, like the earlier person you spoke with, I think yesterday or so, contributed. So by and large, you see, one of the good things about capital is that capital is like water. It has no enemy. What it's looking out for at any given point is the fruit thereof.
Right, capital has no enemy. But, we know that the central bankers are still battling, inflation globally at this time. And the Monetary Policy Committee will meet this month. First one without Mr. Godwin Emefiele. What are you expecting?
Yeah, the first MPC meeting, if you do recall one of the comments I made at the earlier interview, just on the wake of Emefiele's suspension, I did say that the MPC is a body and it represents an institution. And I also spoke that my expectation for the MPC under the new acting CBN governor is not going to be far-fetched because the fundamentals are still there that they must deal with. So I do not expect any major shift from the position, the policy direction they've been taking. They may be a bit hawkish in terms of trying to jack up, the MPR as was customary under Emefiele. I think they will want to see much more decisions taken in trying to stabilize, the foreign exchange market. Already, we are beginning to see the results of, the policy pronouncement by the government that opened up the market and gave rise to, the floating rate regime, and it's already impacting on the reserves level. That speaks, to some concerns that may ultimately manifest, because if you have the floating rate and the demand pressure comes on the supply end of the foreign currency, then we will have some teething issues to grapple with. But right. I think also, as government is beginning to think, I hear they are already having conversations with the World Bank, which in case is really going to blot our debt profile. But I think the advantage in that is that it is more likely to be a cheaper source of funding than Euro bonds that we got customary to.
All right, Mr. Saku, well, still early days. We'll be looking out for what happens in the second half of 2023. Let's see if we can get another stellar performance from the NGX. Thank you so much, Mr. Andy Saku, equity trader, Capital Care Trust, and partners. It was great having your perspective today.
My pleasure, as always. Thank you.
All right, now let's get some expectations for the week coming next week. Now, we see Quadras asset managers expect investors to trade cautiously and the week ahead as they anticipate the H1 2023 earnings season. Outstanding analysts reiterate the need for taking positions in only fundamentally sound stocks as the weak macro environment remains a significant headwind for corporate earnings. All right, that's the show today. Remember, you can watch this again on our YouTube channel. Let's flip over to YouTube, search for Channels Television. You can watch all our productions. And you can also visit our website, www.channelstelevisiontv.com. Thank you for watching. I'm Ladi Williams. From me and the team at Channels HQ, it's bye for now.